Hello and welcome everyone to my channel, The Quality Investor. This week, this channel reached 100 subscribers. I want to thank everyone for your support so far. I truly appreciate it. This is just the beginning. Earnings season kicked off this week, and that means I'll be providing commentary on some of my holdings as well as some market bellwethers. This helps assess if my investment thesis for a business remains intact, as well as defined new investments. Yesterday, one of my larger holdings, UnitedHealth Group, ticker UNH, they were first on the docket with their Q4 2023 earnings. UnitedHealth posted yet another strong quarter. They beat both revenue and earnings by posting strong top and bottom line growth. However, the stock slid yesterday by 3.4% despite the aforementioned growth. So what happened? Well, I want to discuss the numbers as well as identifying why the market had a small sell-off for UnitedHealth. Before diving in though, my investment thesis for UnitedHealth is simple. Point 1. UnitedHealth dominates the health insurance space, which gives them monopolistic qualities and pricing power. In short, a strong economic moat. Point 2. UnitedHealth strengthens that moat via complementary acquisitions that grow market share, diversify revenue streams, and gain access to new and innovative technology, keeping their competitive edge. Point 3. Excellent management that uses capital wisely and efficiently, shown by continual growth in ROIC as well as gross operating and free cash flow margins. And point 4. UnitedHealth is a free cash flow compounder, which allows them to reinvest and acquire smartly and reward shareholders via dividends and share repurchases. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know right away when I post more stock analysis content. Quick look at their share price. You can see they fell yesterday by $18 to $521.51, that 3.37 drop I previously mentioned. But they did have a beat, not a huge beat, but a beat by 2.94% on earnings per share and a 2.4% revenue beat. Here is the initial summary of the UnitedHealth Group as a whole from their earnings release. And we can see here the revenues are up nicely year over year from $371.6 billion to $324.2 billion, as well as earnings from operations. So 32.4 over 28.4 from the previous year. However, the operating margin is down slightly. In the prior year, we had an 8.76% operating margin and is now at 8.7% operating margin. And same with the net margin, another slight decrease in net margin. So it is something we should be keeping an eye on going into 2024. The big reason for that margin decrease appears to be this. And also this is, I think, the primary reason for that 3.4% decrease in the share price today. The full year medical care ratio at 83.2% versus 82% last year. And a bit more concerning is the fourth quarter medical ratio was at 85%. The medical care ratio is what percent of premiums collected by UnitedHealth are paid out to claimants for their healthcare. And that means 85% or 85 cents of every dollar collected in premiums was paid out for medical costs. So that is something throughout 2024 we will want to see UnitedHealth keep down. If they let that increase throughout 2024, it will be a struggle for the business to gain share price throughout the year. However, they did have very strong cash flow yet again, and that is really one of the big strong points for UnitedHealth. They are a cash generating machine. So they had operations at $29.1 billion or 1.3 times net income. And in a little bit, I will be discussing how that translated to free cash flow. And they also had a very strong return on equity of 27% for 2023. Now we're looking here at the consolidated income statement. We can see that strong revenue growth, which was 14.6% increase year over year. However, this is the medical care cost that we are talking about. That is actually up by 14.73%. So this is what we're going to watch out for 2024. We want this number to come down, stay flat at the very least, or come down at best. And yet again, we do see that UnitedHealth is delivering value to shareholders. $23.86 earnings per share over $21.18 last year, as well as share buybacks. You can see here they have 938 million shares outstanding versus 950 million shares outstanding in the previous year. Now, coming over to the cash flow statement, here is where we're going to be calculating our free cash flow. You're taking your operating cash here, 29 billion, less your purchases of property, plant, and equipment, and that is a 3.38 billion charge there, which gives us a total free cash flow of the year of $25.68 billion. That is an increase over the previous year of 9.7%. However, in Q4, the free cash flow was actually a negative 6.2 billion. They didn't provide just a Q4 free cash flow in the earnings release. However, you can derive that when we look at the 10Q from the previous quarter, 34.261 from cash flow from operations at September versus the 2.4 billion in capital purchases here. And that gives us a free cash flow of 31.8. So you can see there was a pretty large decrease. Now, what is the reason for that decrease? And as shareholders, is it something we should be concerned about? Because I always say free cash flow is what drives returns. Well, the first thing to point out, and I'm here on the year-end statement, is they did have an increase of cash of 2 billion for the year. So in aggregate for the entire year, they increased their cash position by $2 billion. Also, it wasn't due to net income falling or anything like that. They had a 23.1 billion in net earnings on the year. In the previous month, through September, they had 17.5 billion. So they did increase their net income. So really, what is the reason here? Well, after a bit of digging and starting out on their balance sheet for the year end, we can see they have current liabilities here of $99 billion. However, if we go back to the previous month, the previous quarter, of September 30th, we can see that their current liabilities is $114.1 billion. So a large decrease in current liabilities, which means a decrease in cash. Additionally, if you look at the long-term debt here, $58 billion of long-term debt, and add that to the $5.29 billion in short-term debt, and you compare that to Q4 here, we have $4.274 billion in short-term borrowings, and then $58.263 billion in the long-term debt, meaning their long-term debt ticked up slightly. However, they did pay off about $1 billion worth of their short-term debt. So really, their free cash flow decreased in Q4 because they had a very large position in cash, probably couldn't find better ways to allocate that capital, and decided to pay down liabilities and debt, which is not a concern, in my opinion, for their free cash flow growth for the future. And finally, the last thing I want to point out in the earnings release is the amount of people that they serve. You can see in December 30th, 2023, they had 52.75 million total customers served throughout the year versus 51.695 million customers served in the previous year. So again, they're increasing the amount of people they're collecting premiums from, which is always a good thing. And that's something we're going to continue to watch throughout 2024. So after updating my valuation summary with the most recent numbers, I am coming up with a discounted cash flow price of $817.60. And one thing about UnitedHealth is they pay a very strong dividend, growing over 23% over the last 10 years per year. And that gives us a dividend discount model of $667.18. And that's projecting 12% growth over the next 5 years. And finally, we have an exit multiple price of $404.35 when comparing to their peers. And one reason for that is right now they are trading at a 22.6 PE, and the rest of their peers are averaging around about an 18 PE ratio. So that does bring down the valuation a little bit. However, it's still a very strong company. They have a valuation average of $676.68. Right now, they're trading at $521.63 after that share price decline today. And with a 20% margin of safety, that's an acceptable buy price of $541.35. So given a very strong free cash flow generating company, coupled with a very strong balance sheet, I think there's a lot of room for growth over the next 10 years for UnitedHealth. So all in all, a strong quarter for UnitedHealth. I do want to see that medical care ratio come down a little bit, and that is something I will be watching out for the rest of 2024. However, I don't think it's too concerning for the long term. So long as the free cash flow continues to rise, so will the share price. Before we go, I do want to emphasize that this is not financial advice, and I do currently own a sizable stake in UnitedHealth Group. With that, thank you for watching today's video. And what do you think? Please comment below with your thoughts. I love the feedback. Also, please hit that like button. And if you found this info helpful, consider subscribing to our channel and joining our community. Thank you and happy investing.